Hello and namaste. This is Neeraj here once again and welcome back to my channel Financial Market Analysis Twist by Neeraj Shah. And in today's video, I want to discuss something regarding the investment prospects in startup IPOs, in IPOs of the startups. So before starting this video, I would like to thank everyone who has subscribed to my channel. I am really grateful to you, all of you, and all the viewers also. And also that I have specific stock ideas which I give, all multi-bagger unique stock ideas. I have a different format of the videos. It's called premium video series, and there for a very nominal charge I discuss the specific stock ideas I give for future multi-bagger returns. And I have already uploaded two premium videos of two specific stock ideas. So whoever has not subscribed to those two videos, if anybody is interested in knowing about some two specific stock ideas, unique stock ideas, then they can contact me by email. My contact details are in the description box down below, and I will share the details regarding that. It's on the payment basis, very nominal payment of 1,000 rupees per video. So let's start. So this is regarding all this now. The market is anyway it's resilient enough, and there are talks about this technology startup IPOs coming into the market in next 6 months or so. So something like Paytm, then Zomato, and I'm talking about this Indian startup IPOs which is coming in the Indian market. But whatever I talk, it applies to all the markets and all the tech startup, particularly technology startups. It's relevant to across the world. So because the basic idea remains the same. So when we talk about the startups, whether one should invest in those IPOs or not, so my firm view is that one should not. One should always avoid this kind of IPOs, particularly these technology startup IPOs. Why? The first and the foremost reason is they never make any profits. They're all loss making, and not too small loss making. It's heavy loss making companies, and even on the operating basis they are loss making, not only on the bottom line basis. So on the operating cost also, if they cannot recover, so what kind of why one should invest into this? And you look at all the past records of all these such technology startup IPOs, they never make money. You look at Uber, it's a flop. Whoever has money, put money, I don't know about the stock price and what stock price, but it is in the loss making. Okay, you will talk about the Airbnb, also they are talking about in the international market. I don't think so they are making any profit. They are also into heavy loss making. Now look at what coming into the Indian IPO market is immediately this Paytm is coming, right? So Paytm, if you latest release of their last year's not revenue, we're talking about the losses. It's in the range of 1800 crore, 1800 crores. And they said that we have cut this losses extensively because of this cost cutting. And all these IPOs, all these tech startups, they always talk about the revenue, because this is a Ponzi scheme, keep on going on, revenue. Okay, you may have a very big revenue of $1 billion also, but at the end of the day, if as a company you are not making profit, then how you can share that profit with the shareholders, so with the investors? So that is what the crux idea is, that this is a startup which is the culture has been propagated by this few rich private equity and venture capital investors, and for them it is a gamble, because it is not they have enough of money and they try to put it's like gambling. So if in 100 times they put it into money, one or two stocks or one or two ideas may click and may start making profit. And then the valuation comes into the picture. The second is first, they never make profit, so there is no point of putting money. Second is, it's a kind of a musical chair story. Musical chair story in the sense that startups, particularly the technology startups, they never come at a valuation in the initial phase. Initial phase, it's always invested by this private equity investors and venture capital, which these people only get at a very cheap that stocks, which is in the private when they start as a startup. So those few private investors who support them by putting money and get the maximum shareholding into their at a very cheap valuation. So by the time more and more it grows as far as the top line is concerned. In few years time, over a few years time, they come out with the Series A, Series B, Series E, like this way funding. Okay, till the time it becomes a sizable kind of a venture, and that is where they think about IPO. Basically, IPO is nothing for these tech startups but to give avenue for this initial private equity, venture capital, all these initial investors who had invested money into these startups, give them the exit route. So IPO is nothing but the exit option for all these initial investors. So why you should, they make 10,000 times of profit because they entered at a very cheap valuation, and almost all these startups, IPOs, they come out at a very, very high valuation, because the valuation is high because they are anyway not making profit. So, you cannot have any kind of PE because there is no earnings. The denominator is zero, it's negative. So it's kind of crazy valuation it comes, and they just want to offload their stocks, these initial investors, at a 10,000 times profit and 1,000 times profit they make. So this is a scheme for enrichment of these initial investors at the cost of the public investors. Okay, so this is why I don't like the startups, and also to reach this so-called tech entrepreneur who started this idea. And third reason is also, so it's a musical chair. So in the musical chair, as you know, that first this few minutes the game keeps on going and everybody is happy, because it's in circulation. But as the time goes on, this cycle becomes smaller and smaller, and whoever remains in the last, he is the winner. But here it is the musical chair, whoever remains last, that is the public IPO. That's what last is the public IPO. The public investors comes as IPO into the public stock market, this primary market. So this is where you get trapped. And the third is that all this scheme has become like Ponzi scheme, because not half of them, 90% are stupid and crazy ideas, which has no practical value, which has no usefulness in the life, which is no relevance. It's just somebody's fancy mind, and because that craze is there, startup, so they make it their own business or their own stupid ideas also, mold it like startup, and they name it like startup, and they said that, see, this is the idea and we want to build on that idea, and so we would be very happy if they make this presentation and all these things. So it's a game and even those, by the time, it comes into IPO, most of these initial entrepreneurs who had started these companies or this thing, they are hardly the owners of these companies, because they have sold their stake to all this private equity and all this venture capital. So they have no stake in the game. So they are also like, they act like private equity investors and venture capitalists and investment bankers. So they make a lot of money just by this idea and selling their stake, selling their ideas. In the process, by the time it comes to IPO, they may have hardly any stake into the game or any teeth in the skin. So they may have not have much stake into the game, and it doesn't interest them. So interest is that once they sell this idea to the public in IPO, once it is floated, it's everybody, initial investors including these promoters, has made enough of money, and their interest is not there. So they go into searching for some other this kind of ideas, where another set of investors they will make, and all this they together it's called, I called it a wolf mentality. So all these wolves get together, make something, and they try to, in few years time, they try another idea, they try to put it into the heads of this gullible IPO public investors. So this is what I wanted to discuss, that you should not this is my personal opinion, is that I will never invest into the any business which doesn't make money. And startups or tech startups, as a business, they have never made money, and I don't think so they will. Ola also will ever make money, because they have so much of huge expenses of all these employees and technology and all patents and everything and offices. This my personal view and my recommendation is that one should not invest into any of these upcoming IPO startups like Paytm, Zomato, Ola, or whichever, and where anywhere in the world, all these kind of startups which come, they don't make money, and it is only going on to the frenzy of the people's investors. So even if they come up and even if they make a good start into the IPO share market, it gets listed as premium and all these things. But I am not a trader, I am not a technical guy. I believe in the firm fundamentals and futuristic fundamentals, which may not only grow the top line, but ultimately any business or any work you or me or anybody does, it does for some money, right? Making money, making profit. So if that business itself is not making profit at the end of the day after all the expenses, then I don't consider it as a good investment idea. That's it from my side, and thanks for watching, and we'll see you once again next week, maybe with some new unique ideas. And if I come out with some new unique, I'm right now I am on this way of process of researching a new stock idea. I am already gathered my material and I am doing much more deeper research. So if I get convinced and if I format this, then I may come out with that another premium video very soon about some unique stock ideas. Any case, thanks a lot. Love and ciao from Neeraj from Moscow. See you once again.